Hi everyone. Um, in the in the last class, we had discussed about the hire purchase system, uh, the features of it, and the difference between the hire purchase system and the installment system. So, in the last class, um, we did mention that a hire purchase system, the payments are made in installments, okay, uh, and that too it is in a staggered way, and that when a hire purchaser signs the agreement, uh, he attains the possession of the goods. At this at the same time, he does make a down payment initially. So what is this down payment? Down payment is actually the initial payment which is made by the hire purchaser to the hire vendor. The down payment will not involve any interest because it is paid initially. But the installments will include interest and plus the principal amount. Now, in a hire purchase transactions, they're pretty different from ordinary cash or credit transactions. In hire purchase, the price includes two elements. That's the cash price and the interest amount. So the cash price will be of capital nature and the interest amount will be of revenue in nature. So it's important to know how to calculate interest, okay, in order to solve hire purchase problems. So we'll be looking at how to calculate the interest amount. So usually the questions that we get are mostly of these three scenarios, wherein in the first case the installment, the rate of interest and the cash price would be given. In the second scenario, where the interest and the rate of interest would be given but the cash price would not be given, and in the third scenario, the installment amount would be given and the rate of interest and the cash price, the rate of interest would not be given and the cash price would be given. Now, so we need to find out what kind of problem, what are the kind of uh, information they have given us in the problem. And the second thing that we need to know when we look into a problem is whether the interest is included in the installment or not. Now, how do you figure it out? So to explain that, I have mentioned over here that the installment, okay, amount is actually equal to the principal amount and the interest amount, okay, in this particular scenario. And the installment happens to be equal to principal plus interest here when the down payment and all the installment amounts, when added up, exceeds the cash price. Exceeds the cash price. So I'll explain it to you how it happens. Say for example, as I said, in a hire purchase, say for example, a hire purchaser purchases a machine from the hire vendor, and say for on 1st Jan 2016, on a down payment of say 3000 rupees, okay, and installments that is being paid in five installments of rupees 6000 each. So In order to know whether the installment is inclusive of price of interest, it would be that when you add the down payment and the installments, that's 5 installments and 6,000 each in each installment. So here in this question, the cash price is say 30,000. Okay, so this will give us 3,000 plus 30,000, so this will be 33,000. So you can find that the total of the down payment and the installments are definitely exceeding the cash price, which is 3,000. So that means your your installment is inclusive of interest. Okay, so that means your installment is inclusive of interest. So there is this principal amount and the interest amount. The interest is 3,000 and the principal amount, which is will be equal to the cash price, so that will be 30,000. And installment price or the higher purchase price is around 33,000. I hope that's clear. So we look into a now we look into the second situation when interest is not included in the installment. Now how do you know that whether the interest is not equal to installment, is not included in installment? That happens when the down payment and all the installment amount when added up equals to the cash price. Now, for example, this is the second situation. This is the first one. Second situation. Say the down payment, so the higher purchaser purchases a car, and this is the higher vendor, 1st Jan 2015. The down payment is 40,000. Okay, and installments uh, 4 annual installments of 25,000 each. And the cash price is 1,40,000. So I told you in the second case, if you need to know that the installment is not inclusive of interest, that means then the down payment and the installment total will be equal to the cash price. So here we can find that the down payment which is of 40,000 plus the installments, that will be 25,000 into 4, will be equal to the cash price. So how much will it be? 1,40,000 is our cash price. So if you add this, it will become totally 1,40,000 equal to 1,40,000. So the interest is not included in the installment amount. So this is how you get to know. So I'll do one problem here for you. It's pretty simple. We have this question here. It says that on 1st Jan 2015, Ramlal purchased a machinery on hire purchase system. The payment was to be made 4,000 rupees down on signing the agreement and 4,000 annually for 3 years. The cash price of the machinery was 14,900 and the rate of interest was 5%. Calculate the interest included in each installment. So this is the question. The payment is 4,000, down payment is 4,000 rupees, and they're making it a 3-year installment, 4,000 each. The cash price is 14,900 and the rate of interest is 5%. They want us to calculate the interest which is included in each installment. So what we can do is we'll just calculate it. So I think I'll write down the down payment is 4,000 rupees each and installment is 4,000 into 3, which is 12,000. So the total installment is equal to 4,000 plus 12,000, which is 16,000, and the cash price is 14,900. So definitely the installment amount is more than the cash price. So the difference between the installment amount and cash price is your interest. So that will become 16,000 minus 14,900, which is going to be equal to 1,100. So this is your total interest. As I told you, installment is always equal to the cash price plus the interest amount. The cash price, or you can say the principal. Okay, so installment is equal to principal plus interest. Now, let's calculate the interest now. Calculate the interest for each installment. Okay, so I'll prefer doing this format here. It's pretty easy. So what you can do is make 5 columns. Okay, the year column, the installment column, the interest column, principal, okay, outstanding cash price. All right, so here we have so as per the question, it was 1st Jan 2015. 1st Jan 2015, he had made a down payment of 4,000. Okay, that's the down payment. Write the down payment first because that was done in the beginning. And since the interest is not included in the, we don't pay interest on down payment, so need not write anything there. And this is your principal amount, definitely 4,000. So initially the cash price was 14,900. So since you've made 4,000 down payment, the remaining amount to be paid is 10,900. Then at the end of the year, as I say, as it's mentioned in the question that the installment is for 3 years, so that particular year you need to make your installment payment. So it is of 4,000 for that year. The installment payment for each year it is 4,000, and we have to pay interest. But remember, the interest is always paid on your outstanding cash price. So remember that always. Calculate the interest on the outstanding cash price. Alright. So you have your 10,900 into 5%. So you have your 10,900 into 5%. So that will be 545. Okay. So that is around 545. Then the principal amount, see, the installment is equal to interest plus principal. Remember that. Installment, okay, interest plus principal will give you installment amount. So 4,000 minus minus 545, it will give you 3455. So you have 3455. So now from 10 of it was initially outstanding cash price was 10,900. Now you've made principal, you've made 3,455 rupees paid against this cash price. So we have 3,455 deducted from 10,900, and now the outstanding cash price to be paid for the next year, you deduct it and you will write 7,445. All right, then again next year at the end of the year you need to make your next installment 4,000. You have to pay the interest on the outstanding cash price, so it will be 7,445 into 5%. So you have 7,445 into 5%. So that will be 372. Okay, so 372, and then we will deduct interest from the installment to get the principal amount. So 4,000 minus 372, that will give you 3,628. So you have 3,628. So deduct the principal amount from your outstanding cash price, that is 7,445 minus 3,628, and you will be getting 3,817. So you have 3,817. Now this is the third. Remember 3 installments. So the next year, 31st December 2017, you're paying an installment amount of 4,000. Remember, you're going to pay off this principal amount because that's the last installment. So make sure you bring this amount over here, 3,817, and deduct the principal amount from the installment amount, and you will be getting the remaining interest amount, 4,000 minus 3,817, and you will get 183 as your interest. So that's your balancing figure, and now you can total it up and check it out if you're right. Here you have 4 into 4, so that will be 16,000. So you're right there, yeah. And then your interest amount should be totaling up to 1,100. Let's check it out. 545 plus 372 plus 183. So that should be giving you 1,100. So yes, we are right there as well. And the principal amount should be totaling up to your cash price. So let's see that. 4,000 plus 3,455 plus 3,628 plus 3,817, and that will give you 4,900. So yes, we are right. So this is the analysis of your interest. Okay, your interest calculation for each installment. Thank you.